The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, I'm here today with John Charbonneau, pretty well known in Ethereum and crypto communities, now a venture capitalist and has long been a writer and thought leader. John, if you want to introduce yourself quickly.
Yeah, what's up? Good to be on. As with the intro, the main thing I do is co-founder right now of DBA. So crypto, pretty, straightforward, traditional VC. Mostly investing in, I would say, like infrastructure type projects, though broadly generalist, and mostly just try to do focused kind of low level work. Have also been described as the much less funny VC version of Gwart. So,
well, that's a compliment, I suppose. You just had this research day that you guys host. Is it annually?
Yes. Well, now it is. This is the second time that we've ever thrown it, just because DBA is like a little over a year old at this point, but yeah, so we've thrown it twice now. And we plan to keep doing it every year.
What is the idea behind this? I watched some of the videos, so I see you just like get projects together and have them give like TED Talks essentially. Is that sort of the premise?
Yeah. So most of it is just like a super selfish version, basically, of like what I want a conference to be. Myself and MJ of like, I don't like going to conferences. The last one that I've gone to was Breakpoint last year. And the reason that like I still enjoyed Breakpoint last year was because it was like right before Solana took off. So it wasn't just full of like, a million people, just like VCs, everyone there. Don't want to hang out with people like myself. And so it was actually a fun conference. So like I haven't gone to most of them lately. Most people are in New York anyway now. So it was really just like, we want to have a conference where it's just like, you can actually have like a reasonable sized group of people who just like want to nerd out and talk about fun stuff. And so like most of the projects that we have talking there, the vast majority of them, like they're not portfolio companies like that we're invested in or anything. They're just like, it's just like interesting stuff that like we want to hang out and talk about. Also most credit for this, by the way, like 90% of it goes to my partner MJ on this. Although I'm the loud one on Twitter, he is the one who gets like almost all the credit for this and a bunch of other stuff. We used to do like small research clubs too, which is kind of like the genesis of how actually DBA started. Of like MJ was like doing these like really small research clubs of like 10 people ish. I want to say, I'm losing track of time. It was actually like 2 years ago. And I happened to be in the first group of the first like 10 of them that like one of the people he invited me. And so I kept going to those like every few weeks. And then by the end of the year was like when we decided to start DBA together. And then it kind of evolved into this. Now we do this like one bigger one every year, which is a ton of fun.
Not that you have to pick favorites, but what did you find to be the most interesting talk at this most recent research day? Or you can name a couple. I don't want you to have to pick or choose.
Well, super biased. So the first one I'm going to pick actually is an investment. It was Josh's from Astria. His was also, just for anyone who watches it, I think was like probably objectively the most entertaining. One, Josh is just like my type of speaker that like I really like personally. Like he speaks at like 3x the speed of a normal human being and will just say whatever shit is on his mind and will like not really hold stuff back. Like his talk was called like, we're all building the same thing. And it was basically going through like ecosystem by ecosystem. It was like, this is what the Ethereum supply chain looks like. Like, this is what the Solana supply chain looks like. This is what the Cosmos looks like. And it was like, hey, this is what Google looks like. And they actually all kind of look the same at the end of the day. And was like calling out like a lot of the stuff in the different ecosystems like really do kind of converge to the same thing. And I think that's like totally true. And I think we're like starting to get a better idea of that as an ecosystem, which would be like really helpful for people to build like going forward once we realize like, hey, like we're kind of building the same thing over there. Like we should probably learn from each other. That one was really good. The other one that I would say was the most entertaining, at least, was Connor's from Celestia. His was really funny just because Connor from Celestia is like super, super funny. And just like his like dry humor delivery of all of them was just like really, really good. He was talking about subjectivity oracles, how you can have like enshrined oracles kind of in sovereign chains, which is really, really good. Other favorite ones, And I think what my other favorite ones were beyond that. There was a lot of really good ones. I mean, they went in like all different directions. So, but part of it too is like we actually have like no intentional theme to research day. Like everyone asked us like, what's the theme for research day? And they were like, there genuinely is none. We're just going to pick the like however many time slots we have. Like, what are the most interesting talks, and say like, go talk about it. So like one on the like super far end was like we had Leon from Alpin who is talking about like a very different talk from Josh's at like a very different level of like, hey, here's this like really complex like ZK paper that I just put out, and like going through that. So like total opposite direction. And that one was really, really good. But yeah, really like all over the place of just like what are the most interesting talks, and like kind of like give the speaker liberty to go talk about it. So it was a lot of really good ones there. Shilling, but I highly encourage everyone to go check out the videos. We did post them like yesterday or the day before now.
Yeah, I watched Liam's talk. He another Bitcoiner was talking to me about this, and he's like, he has the makings of like a mini Andrew Polstra. Like they even kind of like look a bit similar, I would say, and like they have like I think Alpin's doing something very interesting right now. In the same vein, but more broadly, how do you feel about like the general sentiment of VCs and in crypto right now? Like, there's been a lot of Twitter screeching. How do you feel? And also being like a relatively new firm, like what are your thoughts right now regarding like the VC landscape and like maybe some of the pushback that VCs have received as of late?
Yeah. So yeah, I mean, yeah, there's sort of like different parts of it. Like one is like, I guess how I feel and how I think like most other VCs feels. And like, I do think that it's like somewhat different. I mean, part of that's probably just my personality, but part of it is just like, yeah, we're newer and we don't have a lot of the same, baggage of things that people are dealing with. I mean, me personally, like I'm having a ton of fun. Like we're on our first fund, and like I just like genuinely love what I do. So like I'm having a ton of fun with it. The main reasons that I would say there's like a lot of kind of displeasure, particularly within the VC market, is a lot of the stuff that we are investing in is not the stuff that is going up right now. And shockingly, that doesn't make people happy when everyone else's bags are going up, but theirs are not. So like that's kind of been the classic story. Like, yeah, Bitcoin's going up, like all the meme coins are going up. And then like none of this like high float, low FDV infra stuff in the middle, like those are kind of all flattered down only. And like there's definitely like truth to a meaningful amount of that. And I like part of this is just like it's normal cyclical stuff of like, yeah, like a lot of this stuff is going to happen, stuff will get overfunded now. There's going to be most projects like don't make it through the cycle. Like I feel like that's going to be normal. Like we've seen that in previous cycles. But like I get why there's like relative displeasure amongst people. But like on a fundamental level, I mean, I think crypto as a whole is like actually just progressing well, on just like a fundamental level. I feel like a lot of the kind of like cynicism and displeasure with the cycle is almost because it feels like forced that we are trying to explain the cycle amongst each other, and we're telling each other is like BS. Of like previous cycles, I feel like we had like a very clear, coherent story to everyone of like, oh, like NFTs are this great new thing. They unlock, trillions of values. Like this is the reason why we have this cycle, or like DeFi, or like this thing. And it was like, it's very easy and like comprehensible. Like, yeah, like we should be going up a lot because of this. And this cycle, realistically, it's like, prices are going up. And it's like, it's probably like mostly because like things just went down too much before, and like we're getting ETFs, and like there's a little more adoption, but like those aren't like sexy good things that like you can kind of sell to people and like say like this is why this like new base rollup design that I backed is like the right thing. And so I think there's like a lot of displeasure probably because of that. It's because like a lot of it does feel forced, and like it is. But when you just kind of like step back, if you're to look at like where are most things that are developed now relative to like 2 years ago, I would say things are like generally better on the infrastructure level. Like there's generally more adoption. Like I think that we are closer to like people being able to like reasonably use stablecoin payments and all these things. Like on a fundamental level, I think that things are better and getting better in most of those things. But most of the froth, I think, is much more transparently bullshit now, which is why like you see a lot of people pushing back on it.
I think that we're probably just converging on like a more efficient market. Now, I don't know if this really I don't know if prices in some of these like, low float, high FTV tokens and like what they're launching at really are so indicative of that. I I don't have like strong feelings on that one way or another, but I think that also there were, like you were saying, there were more clear, I would say, novel things in prior cycles. Like we had DeFi, we had NFTs, and like meme coins this cycle, but we're still kind of pushing this infrastructure stuff. And like you said, I think it's like clearly getting better, but it doesn't feel like, I mean, more bluntly, like it doesn't feel like the new Ponzi is like really as Ponzi as people want, like in terms of like the real projects building, right? And I think that like this like sort of defeatist attitude toward the meme coins, yeah, like it's obviously representative of all of this, but yeah, I mean, like we have restaking, right, in points. Like this is the meta, but it doesn't feel like, just getting dumped thousands of dollars a day, like yield farming. And then we see these projects like debuting at like outrageous valuations, and everyone's like, well, we might as well just go and degen on the animal coin. So yeah, I think you're probably right. Well, I want to shift gears now and start like talking about a lot of the stuff that you have written about and researched. You did an episode recently. Yeah, you're now the co-host of Uncommon Core. It doesn't seem to come out very often. Like, is it just like random?
Yeah, we do it like we want to do it more. But yeah, we've been doing it like every couple months or so, I'd say is about the like average range of like when we just have a super interesting thing, to go on. I mean, like most of it's just like a time constraint of like, it just takes a while to like put stuff together and like plan an episode. So it's much easier when someone like you will put together the agenda and handle everything else on the back end.
Yeah. So the most recent, I think it was the most recent one, was a discussion with two Ethereum Foundation researchers regarding potential issuance changes or proposals. And yeah, like they sort of fleshed out an idea that has been researched now for quite some time. And yeah, can you just like maybe talk broadly about what inspired like discussions about issuance changes first, and then I'm going to ask like more like personal questions and like what your opinions are on this.
Yeah, sure. Yeah. So the super TLDR on it is that like Ethereum currently has the same issuance curve of when the merge happened. And basically the way that they picked that curve at the merge was like finger in the air, like, like this doesn't seem like these numbers will break anything. So like, let's kind of ship this thing. And now people are kind of like poking at that and they're like, like, should we like, or should our finger have been like in a slightly different place than that? Like, should we tweak this thing? And like the main direction of what, like there's different proposals and research on it, but like, I would say two main directions of things that people want to address. One is generally to lower the issuance. That like it kind of feels like we're overpaying for security right now in these like hand wavy terms that like no one really knows how to quantify. A fun side note on which is like I think it was like John Adler who had said this in like one of the old forum fights on this. It was like the fun thing about knowing the lower bound on economic security is you'll never know that you found the lower bound until you've been 51% attacked. So that's one side of it is like, like feels like we should lower, but like maybe not, we don't know. And then the other side of it is not just like lowering the raw amount of ETH that's issued, but like, hey, maybe we don't want 100% of the ETH staked. And if you like let the current curve play out, it is like strictly rational for people to end up staking 100% of their ETH. And then we just get like 100% liquid staking tokens in like some form. And so some of the proposals are around like, like, should we target a number of, let's try to keep only 25% staked and then 75% stays in like base ETH. So those are kind of the two directions of generally the proposals around.
Maybe zooming out one more time now. What are your like overarching thoughts on changing the issuance curve, or like the degree to which we should meddle with what should in theory be like these market driven mechanisms? But also I wanted to say, you said something like, and I think this may have kind of slipped through the cracks, and it's nothing, I mean, especially revelatory, but you did say it on a podcast, and you said like, if you play out like the game theory, oftentimes with proof of stake, like all the stake ends up very, very concentrated. And so I want to hear like your thoughts on, like maybe first just the Ethereum community wanting to meddle in something that should, work itself out if the mechanism is designed correctly. And then, also just like what you think about concentration of stake, like going forward, maybe.
Before going into more detail, I'd say like just setting with like my high level view on it is basically based on everything. Like I'm not philosophically, there is no scenario in which, you should ever touch the issuance curve in Ethereum. I think there are like arguments to do it in like certain circumstances if, there's enough reason to do it. But like anything that we are talking about now doesn't even come like vaguely close to crossing the hurdle to me of like the benefit of this thing is so clear and objective versus it feels like we just have our finger in the air and we're just kind of putting it in like a slightly different place. And we're like, we just kind of want to touch it and like see what happens. Feels like a little bit too much like that to me. Versus like, I don't think the benefit is super clear. So that's my kind of like high level view on it. The other thing that's probably like somewhat telling, is I had a tweet, like, I guess it would have been like a month or two ago at this point of, the more time I spend on proof of stake, the more I start to appreciate certain aspects of proof of work. I tweeted that right after we finished recording this podcast. So that was probably Sunday, or maybe the night before, or maybe like right before we were filming it. I think it might have been after. It was either right before or right after I'd like been thinking about it. So that's probably also like somewhat telling on it. Yeah, my general views are, I understand the concerns of like, are we quote unquote like overpaying? Like, so we'll take that part of it first. Of like, I understand why people say that, like arbitrarily, yeah, it feels like, if you just reduced issuance like 20% or something, like, is Ethereum going to get 51% attacked? No, it's not going to. But why are you really trying to do this? Quite frankly, at the end of the day, the worst case scenario, if you look at the issuance, like if it goes to like 100% and the burn goes to zero, is something like Ethereum's issuance is like 1% inflation per year. It's something like that. Like it's crazy, crazy low. So like you're already in honestly a good place in the literal worst case scenario, which we're not at today. Like literally today, ETH is net deflationary. Like it just feels kind of excessive. Like it feels like picking up pennies in front of a steamroller when you're going to probably cause a lot of second order consequences. Like it's really difficult to reason about. The other part of it too, less on a long-term basis, but on a short-term basis. And this part of this gets into like, what's your time horizon of what you want? I think it is bad for the current cycle, is what I think that most people are also afraid of with reducing issuance. Realistically, most of the narratives around Ethereum right now are like, oh, like we got the CTF, like we're the credibly neutral one. Like, and like the big, story of Ethereum over Bitcoin is like, we've got yield, like we've got restaking, like we've got all these things. And then if you like sell that to BlackRock and everyone, and then you turn around like, hey, by the way, all these like tech nerds decided to just like cut your issuance in half. Like, sorry about that. Like that's not like a very good sell. So like, at least on a short-term basis, I think a lot of people don't like it for that reason, rationally. And then the other point on targeting, and this gets more into like the concentration of stake point. I'm not like super convinced that whether you have 25% of stake, of Ethereum staked or 100% Ethereum stake, that it actually ends up with like a drastically different composition of like the distribution within that. And there's some kind of subjective arguments on both sides that like either one could actually make it more centralized or less centralized. In general, I don't think that like either is super convincing, or that we're going to have roughly the same thing. And like on a strictly rational basis, that actually is what should happen. So I don't think it'll help with centralization at all, like in either direction. I think it's like centralization of stake is like a valid concern. I don't think that reducing or lowering the target will change anything there. I think the main argument is like, we don't want LSTs is kind of the argument there. And my argument to that is generally like, I don't know, I feel like you kind of accepted that when you like move to proof of stake, like probably going to get liquid staking tokens. Like that's kind of just what happens, man. And even if you put like an artificial target on like how much can be staked, that doesn't actually stop you from ending up with liquid staking tokens in excess of that anyway. Like it is still rational for the market to wrap all of this stuff and just like socialize the yield across more people. So I generally don't think it does a whole lot and like adds all these problems with messing with it.
What do you think about just Ethereum pushing this premise of economic security to begin with? It's a little bit bizarre maybe, because economic security, like you can have $100 trillion of economic security, but if it's all in Coinbase, it makes not very much difference, right? So like it's much more about the distribution of stake. And I do wonder if this, like pushing this theory, like you get these like Justin Drake tweets, right? Where he's like, there's 5x the economic security of Ethereum now than Bitcoin. And it's like, well, it's an interesting way to look at it, but it doesn't mean like that it has any value to look at it this way. I think, do you think Ethereum has maybe done itself a bit of a disservice by like really pushing this idea of economic security without necessarily taking into account the fact that like this has nothing to do with like the decentralization of the network, which should in theory be what we're gunning for here.
Yes, definitely. I have told people at the EF this since like a year ago. I don't think it should be pushed that aggressively. And the other reason why I was like very clear of like, I really don't think you should push this was last, like summer ish when I was starting to like really be like, I really don't think you should do this. Because that was the point where I was like starting to get quite bullish on Solana too. And you could just do the back of the envelope math really quickly of like, hey, like Ethereum stake rate is like 25% and Solana stake rate is like 80%. And if this thing goes up a lot, your economic security is like very plausibly actually going to be lower than something like Solana. And like now it's for argument. And like that feels like a very plausible scenario to happen at like some point. Like it's not there today, but like, I mean, what do you say today? It's like, I don't know, it's like 2-to-1 or something like that probably. So what is Solana half as good? And if it goes up more, it gets even better. Credit to the Solana side. I think that they put no stock in this. They're like, yeah, like it's really decentralization of the boxes. Totally like, yeah, like Sol is like spam prevention. Like it doesn't matter. And I am generally more in that direction philosophically of like the actual decentralization and robustness of the operator set is what matters like a lot more. And so how in practice do we get a super decentralized operator set? And this is what like has kind of pulled me much more in the direction of being like, yeah, I'm super okay with LSTs and like a lot of the even like proof of governance stuff that like I wrote like a year ago is because in practice, if you have proof of stake and you want a super decentralized operator set, I think the best way, like unfortunately that you get that is with like a meaningful amount of like outside subjectivity of like, hey, we want decentralization. Like we are willing to like intentionally craft the operator set in reflection of that. Because if you just like let the free market like go decide, like you're gonna end up with a super centralized validator set that like Coinbase has all the stake and like it's all in an ETF. Like that's obviously not a good outcome.
Yeah. I wanted to go back quickly. I saw that tweet you said like working with proof of stake has made me understand I don't know exactly what it was, but the value of proof of work or something like this. I actually didn't know if that was with regards to MEV stuff or because I think there is some there's certainly like some relevance there, but what was the inspiration for that? Was it with regard like what you're saying now, like just centralization to stake, or like what made you say that like proof of work is very interesting now, having worked with proof of stake?
The main thing was actually a little bit, I would say related but tangential. The main thing is really just actually the simplicity of it and not having so many politically interested parties that are involved in this. Like I noticed that very clearly. And this is a symptom of it. Like like you want Ethereum to be this like value creating, value capturing asset. The result of that is like you have a lot of businesses and projects that are built on top of that have like very strong political influence. Like the very simple practical reality is if you say, hey, we want to reduce issuance, but Coinbase has a business built on top of this, Lido has a business built on top of this, like every other LST and restaking protocol has a business built on top of this, ETH holders are getting their yield, like they're all going to get really mad at you. And the reality is like, even if let's say like this was the objectively correct thing to do, which I don't believe it is, but like, let's say it was, the practical reality is like most people are probably going to get mad at you because it's bad for their bags in the short term at the very least. And so it's kind of difficult to get that thing through. It makes it really simple when you just say from the start, like, hey, yeah, like money just goes to the miners. Like your token doesn't have any value capture. Like Bitcoin's valuable if you want it to be valuable. Like, yeah, you're not getting any cash flows, man. Sorry. Like a lot of the aspects of simplicity around that. And it's still not perfect. Yeah, there's questions with the long-term security budget. Like I get all those things. But there's a lot more simplicity around the asset, which is like super valuable when you're obviously trying to be like particularly like a form of like neutral kind of non-sovereign money. And like it's difficult where Ethereum is starting to realize like you're trying to kind of like kind of touch both sides. And that's been the thing with Ethereum lately is like it is in somewhat of the like it's not quite Bitcoin, but like Solana's faster. Like what's this thing in the middle? It has some difficulty on both sides. And like there's a lot of elegance in the simplicity of proof of work and obviously Bitcoin's design. Like I just come to appreciate that more and more over time.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Like you went on a podcast and said like ETH is not ultrasound money. Like you've been willing to say things. I mean, you're still a VC. Don't get me wrong. So you got to like protect the social capital. But I will say that you've definitely been willing to say like, okay, guys, you're not looking at this correctly. I want to ask you, do you think that there has been some like, I keep going back, there's like this skit, where this guy is like pointing at it's like from I Think You Should Leave, where he's like, we're all trying to figure out who did this. And it's like he's in the banana suit and okay, so you know the meme I'm talking about. All right. I feel like there's a good bit of this that I see within like Ethereum Foundation, maybe, and Ethereum researchers, where like we were talking about a lot of this stuff prior to the merge, prior to the transition to proof of stake. In fact, your podcast partner Hasu wrote like a very well-reasoned argument as to like, look, stake likely ends up with liquid staking derivatives. Here's why. Georgios tag teamed that with him. Another person who's like very clearly intelligent. And I want to ask you, like, do you feel like there's been a bit of like, oh, we can't believe this happened? And it's like, what do you mean? Like, everybody said this was going to happen, because this is a lot of what I see on Twitter. And I'm like, it's almost like, what are you guys talking about? Like, I thought we all knew like Lido was going to be dominant, that like Beaver was going to have 40% market share. Like, what are your thoughts on like that idea?
I definitely think there's like a very meaningful degree of that being true. I think the most valid counter argument to that would be that like, yeah, this is true in theory, but like empirically go look at every other chain. There are a lot of other proof of stake chains around. And if you go look at literally any other one, even today, even like Solana, liquid staking adoption is like absurdly low. Like most of these chains, it's like 1% territory. Like it's super, super low. So I think there was like a very valid argument in hindsight, like looking from the perspective of people who weren't as concerned at the time of like, yeah, this like makes sense if you play everything out rationally, but like, if you play everything out rationally in these systems, like everything breaks anyway. Like there's some point of reason. And if you look at every other system empirically, you don't actually get to that point. Like very few people use these things. So I think that's probably my strongest argument against it, like from their view in hindsight. And in hindsight with 2020, obviously that like had a severe underappreciation of the fact that Ethereum has very different dynamics than all of these different chains, which is why you get a bunch of liquid staking adoption. And a lot of it is actually a product of the fact that it didn't start with proof of work first. And where you had like Lido and this stuff pop up ahead of time. So there is some degree of like, I think it's fair to give like a lot of leeway of it was a completely unique and different circumstance. And that resulted in a very different market structure in Ethereum than we still even see in other chains today. So I think that would be the best argument against it, which I think is valid.
So like you wrote a thread. Actually, I have two questions before we get to that. So you wrote a thread about restaking recently. I think it was when Eigenlayer launched. Just general thoughts on restaking. One thing that like, for example, Tarun says is like restaking may help sort of balance these concerns about issuance or centralization of stake. Like potentially, like if you're like, we kind of have new modules where stake can go as opposed to just being dumped in Lido or Coinbase or whatever. And so maybe we watch the market equilibrium work itself out before we make some like, potentially very aggressive changes to issuance. So like, what are your like general thoughts on restaking, I guess?
Yeah, quickly on the issuance thing. Yeah, I definitely don't think that anything with restaking right now is an argument to change issuance. If anything, I think it's more in the opposite direction of like, we don't know what the hell's going to happen in the next like year or two, to be totally honest. Like, let's just see this stuff play out so we don't like try to go make a change and then realize in a year, like, oh, that was a bad idea for reasons X, Y, and Z that we couldn't reason about. That's my general view on that, for starters. So like restaking as a whole, I mean, quick disclosure, I'm a personal investor in Eigenlayer from like a while back. DBA is not. It was from before as DBA. General view on restaking landscape as a whole. The core concept of it is fully sound and makes sense. And like there is like a like real use case for this thing. And that the vast majority of stuff that is currently built around it is like unsurprisingly kind of bullshit. Like as happens with like most things that are like super hyped up in like a new cycle, like unsurprisingly. Basically, I mean, on like core restaking protocols themselves, like you basically, I mean, like Eigenlayer is like obviously kind of the leader, and then there's like a couple others for investors who couldn't get into Eigenlayer, and then there's a bunch of LRT projects. We didn't do any of the LRT projects personally, mostly just because kind of my view on all of them is like, like there's good teams doing some of them. But from my view, they're mostly like highly differentiated, undifferentiated from each other. And realistically, like if you do any of the back of the envelope math on like what's the yield that's like actually going to be produced by these things, like not a lot. So they make sense as like token farms and stuff like that. In the short term, they'll get high FDVs. I don't really think they'll generally have staying power. So like we actually bought Lido like in the last few months, especially like in the last month, everyone was freaking out with all the conflicts, global stuff. Because I think that is like actually a like simple product that like actually has economics that make sense and like has staying power over time. Even though it's like not the sexy thing right now in this cycle. On the AVS side, I think is also where you see the same idea of like most of them, like, yeah, they don't make any sense. Like they're riding the AVS hype bandwagon. And then a handful of them are like genuine, very good projects. And I think that those will have a lot of sway in how the market like actually turns out in this at the end of the day of like, what are the LRTs that matter? You know, what is the restaking protocol that matter? Is like of the handful of like really big AVSs that stick around and have staying power, like what are they using and who are they attached to? So like are pre-confirmations a big thing and like who do they go use for that thing? Like that could be important. The one that where Disclosure invested in is like Ethos is like a simple example of like one that like I think is just like a simple product that like makes sense and kind of highlights like I would say why restaking makes sense at least in the simple case. Because I'm like the very TLDR on them is like they let you spin up like a ETH secured chain like using Cosmos SDK. So like they'll you know expand from there, but like the super dumb idea of it is like Cosmos Hub for restaking. Like just think of it that way. And like there is just like it kind of highlights the simple use cases of like, hey, like maybe like I want to spin up a chain, but I don't want my token right at launch. Or maybe I just like don't actually want a token. Like this is a super at some level like of economic security at like a very cheap rate of like it should be pretty easy to get some like, you know, multiple restaked ETH that like gives me like enough security for what I'm doing. And like that's cool. Like that makes sense. And it should be pretty cheap for these projects, all of that. Or like maybe you want to do dual staking of like, yeah, you want to avoid this scenario that's like often described like with Terra of like maybe your token goes to zero and your proof of stake security goes to zero. Like you can get this like dual staking token for like a pretty cheap rate that like gives you like a hedge, particularly if like your chain is doing like a lot of weird DeFi stuff with your token or whatever, and it may be volatile. Like it gives the market like more confidence at like a very cheap rate. So those kinds of things like make sense. And I think that there will be like real use for those things in the long term. I think that we are obviously going to go through this like inevitable cycle in the next year though, plus of like, yeah, like most of these projects aren't going to make sense. I don't think that like most of these LRTs are going to make it like a few years out. Like they're kind of going to peter out and go away and then you're going to be left with like the handful of things that actually matter. Like Steve will still be around. There'll be a handful of AVSs that matter and there'll be like some stuff there. I guess the last thing would be like the thread that I actually posted was on like the Eigen specific token mechanism, which is really funny. It was the first like thread or kind of thing that like I posted in like a long time. And everyone like got so annoyed at it, which in hindsight was like totally predictable. So I had seen and reviewed the white paper before and I was like, yeah, this is really cool. Like the mechanism makes sense. I like honestly did not know any details about like what the airdrop was going to look like or like, you know, the transferability and like all that. Like honestly, I like had no idea. And so I just posted this thing right away. And like every single comment I got was just like ignoring everything about like the forking mechanism, which is like all I wrote about, just like complaining about the airdrop. And I was like, yeah, like I get it, dude. Like looking at the details, like I actually get why people are annoyed, but like it's just not what I was writing about. So that was the last thing is like, I think people will like start to look at this over time of the like Eigen like intersubjective forking mechanism, which like, yeah, in hindsight was like, it looks very academic and got buried in the like everyone getting annoyed at the airdrop. But like, I mean, the super TLDR of it is like, if you have a service like DA, any kind of DA layer where like a fault is not objectively attributable on chain, you know, your previous option was like, yeah, you could have like a governance vote of Eigen tokens. Like, do we slash this guy or not? Like, did he withhold data? This is just a better mechanism to solve that problem, which like has less of a tyranny of the majority where like you can flip the token. So like it's a better mechanism for that. It doesn't replace any of the stuff that like ETH should be doing for objective security. It's not super clear that there's going to be like a million use cases for this thing again. Like makes sense for DA layers, like probably makes sense for an Oracle. But like if you're building a big Oracle and you want this mechanism, like you probably want to use your own token in there instead of Eigen because like why not? Like there's nothing special about it. Like you should use your own. So cool mechanism. But yeah, was like kind of the TLDR of it.
Okay, so then what do you think is like the in-game use case for restaking? You've named a lot of things you don't think it's going to be very useful for. Like, what is your idea of like where this goes long run? Like where this is practically useful?
So I think that you're going to see the different major ecosystems converge on similar concepts of this. Like there will be some notion of ETH restaking and Sol restaking and Bitcoin restaking and whatever. And at the limit, like you are going to have this large asset that like should have a very low cost of capital relative to others, where if you want economic security at a cheap rate because you don't have your own token, but you still want some sort of economic security, or you want like a little bit of extra like dual staking because like maybe your token is like worth shit or you're afraid it's going to go to zero. Like, yeah, like add a little bit on the side. Like it should be pretty cheap, at least as like a short run to medium term thing to like get your project going. Like it makes sense for those things. I think that is like the most like clear use case where like the numbers just make sense on this thing. It should be pretty cheap and like it actually provides you like some tangible benefit. That is like the main thing for me in the long run of like, that makes sense. And if you assume that there's going to be a lot of like new projects that continue in crypto, like that makes sense and that will happen. And there's a meaningful degree of like, I've like poked at this before of like one of the big use cases of eigenlayer is like alignment. I was joking about that like a year ago, but like it actually is like true of like why, like at some degree, like why are you going to use ETH versus Sol? Well, if you're like a Solana based project, you're probably just going to use Sol. Like that makes sense. It's the data vastly to your chain. It's right there. Like just go use it. So if I'm like a perps protocol that wants to do some restaking thing on Solana, like you're going to use Sol. If I'm doing this thing in like a more ETH-centric audience and world, like I'm going to use ETH. And so I think you'll see the big assets kind of converge on this of like, there are some basic use cases that would benefit from having some level of economic security that like aren't natively there. Is it going to be this like trillions of dollars and we are creating like billions of dollars of cash flow? Probably not. Because I don't think that most people are going to want to leak like an inordinate amount of value out of their own ecosystem to go pay another token. There's some value for that, but at a low cost of capital rate in the long term, not a very high cost of capital. So there's going to be a limited amount that people will pay for that.
Okay, well, we're gonna skip to MEV stuff now. Yesterday you tweeted something with regards to private order flow, and yeah, it's like it's quite an interesting subject. What are your thoughts on like some of the relationships that are being built for order flow right now? Take over.
Yeah. So this kind of dovetails, I would say, from what we were starting to talk about before, what you mentioned of like, was it foreseeable that like we ended up with like a super centralized builder market when we did the whole PBS thing? And this is part of the like, I think that PBS like honestly, like everyone agreed on this thing at the time of like, yeah, MevBoost is the best idea that we've got at the moment. Like, let's go do that. And like, yeah, like we'll worry about these kind of issues longer term. We'll add inclusion lists and blah, 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 and all these things. Like, honestly, like everyone agreed on that at the time. Or the vast majority of people, 95% of people, whatever. And so the result that we do have now is like, yeah, we do have that centralized builder market. In practice, there's 3 builders that build like 90+% of the blocks. It's SCP, it's Beaver, Wintermute is rsync, and then Titan, who actually uses the real name, is Titan. So they build the vast majority of blocks. Yeah, and the thing that I was like tweeting about last night was like, it was funny. I was realizing of like a year or 2 years, I guess more like 2 years ago, which makes sense. It was more like bear market. Like I feel like everyone was tweeting about at that time, like, oh yeah, exclusive order flow is gonna be this big problem. Like there's all these private backroom deals. And like, this is going to be so bad. It's going to centralize everything. And at the time, there was like nothing going on yet. And then fast forward to now, and there's a ton of this stuff going on at like serious scale. And like, no one is talking about it. And it's just like, it's a very weird, I assume it's a mix of like, honestly, people talked about this a lot during the bear market disproportionately because like there was nothing else to talk about. Prices were down and there were no applications. So we're like, okay, we have to go talk about MEV. And people that's not the case anymore. The other part of it is that, I mean, like understandably, people don't want to call out the people that they're working with by name. Luckily, I'm not working with most of them, so it's sort of fine for me to do that. Like the main things that you kind of see in practice are these kind of exclusive order flow deals, like taking the simplest, biggest ones that I would use are Telegram bots that have billions of dollars of volume, Like they are kicking out like hundreds of millions of dollars of MEV. Like these are like like really, really not small at all. And they seem to have exclusive deals with these builders where basically what they'll do is like, hey, like we send you exclusively like all of the flow. So also for context, these Telegram bots that they do have a lot of volume. In particular, the volume for them is like it's very retail oriented users who are kind of like dumb money flow. So they are generally like overpaying unsophisticated traders. Like this is like the most valuable flow you can possibly get. Like they're going for like overpaying for token sniping type stuff. And so what you could do is like these bots can like send them exclusively to one builder. And that builder, what they can basically do is like they can kind of check the market and see like, hey, like, you know, the market rate right now to win a block is 1 ETH. I've got like 50 ETH that I'm going to make off of this exclusive order flow that I got. I'm going to bid like 1.5 ETH to the proposer, and I'm going to keep the other 49.5 ETH. I'm going to keep some of that for myself, and I'll kick the rest of it back to the Telegram bot. And so that's kind of the general idea of what's going on. Or if they feel like it's not a lot and they're like not actually confident that they're going to win the block, you can kind of just kick that order flow out at the end of the block and then distribute it to the other builders at the end of the block just to make sure it gets included quickly if you don't have enough flow to win the block yourself. But that's the general idea.
Let me quickly jump in here. I haven't I've heard of this, and yeah, I heard rumblings of this myself. And I think a lot of people have. It's nothing like exclusive, but it is less talked about publicly for very obvious reasons. But let me ask you, do you know what strategies these builders are employing? And the reason I ask this is because I think that, well, first of all, I think that like a lot of this stuff is, well, maybe this is like an overarching theme I have with Ethereum, which is like a lot of these are like intractable problems. But the thing about this is like there is a difference, obviously, between getting exclusive order flow and making markets, maybe like you see with Robinhood and Citadel, versus getting exclusive order flow and sandwiching your users from all angles. And I'm curious if you know what strategies, like, you know, I've heard and witnessed the ways that, you know, some of these well-known builders don't sandwich, but the way in which they order the transactions in the blocks is not entirely dissimilar to the end result of what a sandwich would be. So, but I'm curious if you have any like insight as to like what the strategies they're employing. Do you know like what we're looking at here?
I would say that gets nuanced and just honestly varies from one builder to the other. And like, yeah, it starts to become this gray area of like, honestly, what's the difference? I think that like the main high levels that like I think are important and honestly hold in either case is one, most of these deals are very not public. These things are not like marketed and disclosed to people, even though the like couple hundred people who work around these systems kind of know them. I do think that needs to change. And it's not entirely clear, like what's going on with some of the funds of like, yeah, is this being given back to users to any degree? Like doesn't appear to be so. But like generally these things are like not very transparent, is I would say like the biggest problem with them. And obviously then you also have these questions of like market structure. Is it super centralizing? Like, yeah, like it's super centralizing, obviously. Like this is how you get a super top heavy builder market. And you're starting to see like the same trend too. And like, I would say like, would separate this into a different category a little bit, but like similar direction of like the Uniswap X and like now MetaMask smart transactions are also in this direction of like, hey, how do we like quote unquote like solve MEV at our application level? Like we could just like sign some agreements with like 3 or 4 builders and like run this thing off chain. Is the TLDR like what they're doing right now? The MetaMask smart transactions thing also, I legitimately did not even see it when they announced it. Someone told me about it like a week after. I like completely missed it when they announced it. The TLDR for that one, for people who haven't like looked at it closely, is MetaMask announced like 2 weeks ago of their like smart transactions, which is their like new like opt-in product that they have for MEV production and reducing like transaction reverts. So typical like permissioned private type of service. And the way that like it seems to work is like, yeah, like we just send the order flow to like a handful of builders that like we have agreements with, and they could like bid for these things. This one again, like doesn't seem like entirely clear, like who are the couple of builders that they're doing with this? Like what are the details of this? They also market it as front running protection, but not MEV redistribution, which would lead you to probably believe that they are not front running you, but like, hey, V that we are generating, that's probably not going back to users. That is presumably being split by MetaMask and like a handful of builders that they have agreements with on this. There's not like a whole lot of detail about this. Felix from CowSwap had a good thread on this where he was like speculating about some of the details too, like asking like, hey, like any feedback on this. So that would be the other one that I would kind of point to, is like this direction. Like at a high level, I mean, the like solutions to this quote unquote are like, one, the stuff that's like not disclosed, I think like should be disclosed, and like there should be a public light on these things. I don't think this helps like having any of the kind of private stuff, especially when like the few hundred people who are like mostly working around these systems, like I feel like most of us know like what's going on anyway. And then the other side is like fundamental like market structure improvement, which is like, I would say the harder question probably of like, okay, figuring out a way to like, how can we like, privately and permissionlessly like share order flow with each other. And that gets into the complicated, like, yeah.
How is this solved? Because in traditional finance, it's solved by saying you can't front run users. Like, and I've said this before, but like, I do think that it's a bizarre paradox where like users often get better execution in these private order flow deals, right? Like I had this conversation with Alex Nisloban and like oftentimes if you're looking at like pure execution, like Robinhood traders get like very good execution usually, and they get to trade for free. And it's just because these market makers have tons of liquidity on both sides and they know that they can quote against retail, right? Like, and so how do you solve this? Like, what do you think about like some of the solutions for MEV, or is it like over discussed? Like, probably is, but yeah, what do you think about that?
I'd say the main problem that we have is I feel like most crypto users, quite frankly, don't get either. They don't get the transparency aspect or all of that, but they also don't actually get the good execution for most of these things. So like that's the big first problem. And that's the thing that I think is like, quote unquote, like easy to address is like, yeah, I'm not like morally opposed to like, yeah, we don't have a better solution to this. We send it to a handful of permissioned people and like they run an auction on this thing. Like they pay you for it and they give you good execution. Like that can make sense. Like, yeah, like here are the market makers that'll give you good execution. Like that's how it works. If you're going to do that, like actually give the users good execution and be transparent about what you're doing. A lot of the stuff today, like doesn't do either of those. It's like just payment for order flow, but with bad execution and not with transparency. Like that's not great. So that's what gets you like at least on par, I would say, with like where kind of TradFi like execution and transparency is. The other part of it, which is the more ambitious, like, hey, we want to be way better than TradFi. And that's the very concretely, hey, can we get ways for people to much more permissionlessly and privately share order flow with each other? And so that gets into the like complex, okay, do we use like some sort of MPC or do we like throw all this in a TE? Like how do we privately share order flow with each other? And that gets into the much more complicated, like mechanism design and privacy, enhancing technology type of discussion. But the first part should be like solvable on like we could do that. Like we could just disclose what, people are doing and like give orders, give like users good execution. Like those are nothing magic. Like we already know how to do those things.
Are there any interesting, like there have been a lot of, Mike from the EF writes these long blog posts with varying like different MEV proposals. Are any of those interesting to you? Like MEV burn, Pepsi, like Enshrine PBS, like just all these things they talk about that sort of surround the MEV ecosystem. Would you like have any in mind that you're like, oh, this is actually like very important in your mind?
The main ones are, I would say, so I mean, the high level, some of them are important, but none of them I would say directly address some of the stuff that we're talking about here. They are more of the like, okay, let's say that we have centralized builders and there's MEV, that's a problem, like we put that over there. How do we make sure the protocol isn't like screwed because of that? How do we like ensure censorship resistance, like stuff like that? So some form of inclusion lists is like one strong one there of like, hey, like builders, how can we make sure that like the bottlenecks of like the builders in these relays can't just like arbitrarily censor users? So inclusion lists are a proposal there that like makes sense to do over time. There's different variations of inclusion lists. Which one ends up in there and when, that is what I will leave to others to figure out. But those are just like a sensible idea that makes sense there. The other ones are more on the kind of like market structure of like, where do we kind of stick the centralization and the effects that kind of go from there. And so those are ideas like Enshrine PBS, And now the newer ideas of like a tester proposer separation / execution tickets, which is like, hey, maybe we outsource like even more from the protocol, because particularly like timing games seem to be screwing everything up. So like, hey, like maybe you actually have to be really sophisticated even to propose the block. Like maybe we should get rid of that too. And you actually like don't need that. Like all that we need to be decentralized is the testing to what are the blocks, and potentially like forcing inclusion on these transactions. So it's kind of even, I would say, further acceleration of like, hey, we actually don't need much of this in the protocol. Like we can kick even more of this out to the free market. So I think those are interesting ideas. With stuff like execution tickets, you basically get MEV burn out of the box, because what people pay for these like tickets for the right to propose blocks, that's an oracle for how much MEV there is, which is cool. I like MEV burn is like I've always kind of been the same of like, if you have this, like you can click a button and just say like all the MEV is burned and there's like no negative side effects and the solution works. Like, yeah, like I would click the button. All the stuff that I've seen historically is like, like an 80% works. Like, we're not sure if it like weakens the incentive compatibility to the system. Like, yeah, you can break it with an honest majority and all these problems where I'm like it's not worth it. Like you're just kind of trying to mess with the economics, and I don't care enough about that. But if you can get it like out of the box and like it's a good side effect of this, like I think it's cool. Sure, probably throw it in there. But none of them are really trying to fundamentally address like the, like, you know, do users get better execution? Like, is the builder market centralized? It's really on the protocol side of like, how do we deal with that? Make sure that like users still get censorship resistance and like the protocol is stable.
Yeah, well, this may be like good opportunity to kind of pivot to rollups. You were quite like vocal early on. This is another thing that you said, that you quite brave. You said rollups aren't real, right? You wrote this blog post. So, but the reason I asked this is like, do you think that we can kick enough of this stuff to the trading and the financial activity down to these rollups such that the L1 can sort of become self-sustainable and not have such extractive actors on the grounds that like most of what sort of centralized, well, may still be centralized, but at least this like financial activity is occurring elsewhere, and we don't see these like kind of order flow games and stuff. Like, do you think that we can sort of kick this down to the lower layers? And then also, if you want to start talking about like centralized sequencers, decentralized sequencers, you can run with it.
Yeah. So I definitely think that, I mean, at least directionally, more of this stuff gets pushed to rollups over time. Just because, I mean, at least simple back of the envelope math, if we think that Ethereum remains enough throughput to like do most of the volume in crypto, I mean, like we're kind of all screwed and probably out of jobs anyway. So I hope that's not going to happen and rollups actually get a bunch of users. And that means that like, at least directionally, most of the users start to gravitate towards these like cheaper, more usable environments. I don't think it like solves the problem at all for Ethereum L1 though. Like there's still going to be a bunch of liquidity and activity in MEV there. Like even if it's directionally like, like it comes down a good bit and like more of it goes to the rollups, it doesn't existentially solve any of the problems for like the L1 itself. Like you still need to address all of these things. So I'll just kind of put that there for that. And then on the rollup side, just kind of high level, I mean, it's nice. I mean, like a lot of them get to deal with it in much more like simple, dumb, permissioned ways because, yeah, we don't have the constraint of like, we've got like a million validators that we got to worry about them running on Raspberry Pis and whatever. It's like, no, like we could just like have a set of like pretty sophisticated people that were like, hey, like we trust you. Like, please don't front run me. Like this in practice is how like Cosmos chains work. And like it mostly works. And there's like bounds on this and like, you know, you can play with new things, but like generally like you just have a much more controllable environment to kind of play with these things, and try different stuff, which they'll do. Like Ethereum is, to be fair, like the hardest place to try to solve any of these problems because you just gave yourself like all of the hardest constraints possible. It's like, yeah, we want to solve all these like impossible problems, but at the same time, we want to make sure that like a million people are running this system and they're running it like on their cell phones. Like that makes it so much harder to run when you're like, hey, like what if we have like 15 guys that we trust who run this in a data center? Like that makes it a lot easier to kind of solve this. And so rollups are kind of more in that direction of like, it's more tractable. On the centralized versus decentralized side, I mean, rollups are never going to, in my mind, at least they shouldn't go to the kind of extremes of what Ethereum is trying to do with like hardware requirements and decentralization of the operator set and all of that. There's some like reasonable bound on decentralization, which is like does this provide better reliability, censorship resistance, reorg resistance, et cetera, on your chain? You don't need a million operators for that in practice. Like, it could be 10, it could be 20, it could be 50. I don't know the exact number. Pick your number. You could just run it totally centralized too, and I'm sure a lot of them will do that over time. The main thing that I would say that you saw at least recently that can be the problem with that is, like, particularly with a super centralized operator, as we saw with like if you're using a RAS service like Conduit, which is like, it's a centralized operator running this thing. We saw this like with DGen chain, and I forget one other chain. I think had a similar issue where like they just had like 500,000 block reorgs, and they're just like down for days, and it was sort of like, hey, what's going on? That is just like kind of fundamentally, you're going to have like a higher risk of that if like you have a centralized operator who's like the only one running your thing. Like they're going to internally run like some sort of like raft thing where it's like tries to give you like better reliability, but like there's no fault tolerance in there of like, yeah, you can have reorders and stuff like that. So this is why, I mean, like, again, disclosure, like, we're invested in Astria, but like, this is why, like, I think this is like actually going to be the simple dumb use case for a lot of these, like, everyone's so excited about like shared sequencers and like universal synchronous composability buzzwords, whatever. I think like most of the use case for like these like shared sequencers and RASs is like, hey, like, I just want to spin up a chain, and like, I want to make sure the centralized operator isn't running it so that like the chain doesn't go down, and like I don't have to worry about regulatory stuff, and this thing just like works well, and like it works the same as everything else, and like it's really cheap because the cost of replication of like 10 operators versus one operator is like honestly super cheap. It's running a box. Like, it just kind of makes sense. I think that is going to be much more of the use case of like these kinds of things, as opposed to like, oh yeah, we're going to solve like all the interop problems on Ethereum if we like make this like base rollup contraption, which at the end of the day amounts to like, we just have a trusted third party and then we call it a base rollup. Like I think that's in practice the use case for these things largely is like permissionless deployment of like reliable, fault tolerant censorship resistant systems.
Yeah, Vitalik tweeted something like, yeah, or he responded, which got some fanfare, I suppose, about building a public good, right? Like for interoperability amongst these chains. Like, it was somewhat of an acknowledgement that we're seeing like the silo effects maybe of these rollups. And yeah, I mean, this has been the discussion for like a year. It's nothing like really revelatory, but I think it's maybe the first time that Vitalik has sort of said like, yeah, maybe we should put people in charge who are going to like figure out some standards such that these rollups, like all of these rollups that spin up like seemingly daily, can interoperate. Do you think that this is like a likely outcome? Like, do you think that we are going to see, you know, Base and Arbitrum and ZK Sync like want to work together, right? Like, or is this sort of antithetical to their own business interests? And what do you think? Maybe a better question, like, what do you think about like a public good interoperability standard or something like this?
I don't think it's going to happen. Is my like general short answer. Particularly like on all this shared sequencer stuff of like everyone was trying to like pitch from the start of like, oh, like we're going to get like the super chain to opt into our shared sequencer. We're going to get Arbitrum. Like everyone's going to use this neutral thing. Like, even if you can convince me that you solved all the technical problems and all these things, like you even hear people say this today of like, oh, it's not like a technical problem. It's like, it's a social problem. Like we just need to get people aligned and opt into it. I think that is the nice way of saying you realize that you know that they shouldn't opt into it either, because they shouldn't. If I like am optimism, like, and you have the super chain, like you should control your thing. Like there's no reason that you should be opting into this like other system with all of these other people. Like you want to control your own things, like a variety of like sovereignty and economic reasons around that, that you could just imagine. Like people want to own their own thing. Like it's not hard to understand that intuitively. And particularly when people start to talk about, in my mind, these like neutral kind of like, this is the Ethereum shared sequencer and all of those things. All of this stuff like looks the same again at the end of the day. Like we're all building the same thing of like, okay, you want to use base rollups because like it's neutral and like you inherit the liveness and censorship resistance of Ethereum. Got that. That makes sense. But users want fast pre-confirmations. So how do you give them fast pre-confirmations? You run some trusted party service on top of that, where the proposer can in theory give you commitment, not the consensus of Ethereum, just like literally the current active proposer. But we also want them to be decentralized too, we said. So what do? They actually just give that right to a relay. And now the relay just gives you fast pre-confirmations to all the rollups. So like what did we do for like a base rollup at the end of the day is like, we just have like trusted third parties, like give you guarantees to all the rollups again. Like we've just like changed the definition of base rollup in my mind at that point. So it's like, all right, okay, like now why am I using this thing? You just like opt into someone else who's like running a third party consensus anyway. And like that looks the same as if you have a rollup that has their own like shared sequencer or whatever. And then they just have like a forced inbox on the L1 where like, after some delay, like you can force it in. But the faster guarantee comes from our sequencer. Like these look like the same thing at the end of the day. It's like you have a fast path. Like, yeah, you can go take the trusted third party and their consensus. And if you want to get like slower one, then yeah, you just like use the slow path. Like those are the same thing at the end of the day. So I'm generally pretty skeptical of like anyone ever opting into these like super like this is the Ethereum shared sequencer type vision. I think that people just have to understand that like and like that these shared sequencers effectively are like they are like new L1s that are made for base rollups of their own. Like if you use a shared sequencer, you should use it generally with the understanding of like I'm the base rollup to that shared sequencer, and that could like make sense. If you make a chain from first principles, the way that you actually make it is you just make a chain that has really big blocks and is really fast, and you can just throw whatever the hell you want in there. And that's all that like a shared sequencer is at the end of the day. It's like Solana, and you just rip out the execution environment. That is like fundamentally the way that you just build like the most scalable chain. It's just like it's a big dumb data pipe. Makes sense. But like when we try to like strap this onto Ethereum and say like this is neutral and it's perfect for everyone, in practice, like I just don't think there's a way to do that like actually makes sense.
Yeah. Okay. We're coming up on time now, but one last thing. We didn't really talk much about Solana. You've been, like I would say, support. We originally knew you as like this Ethereum, right? Like thinker, but then I think you were one of the ones during the bear market who was, pretty interested in Solana. How do you compare like a lot of these rollups to Solana? Like, are you like, or what problems do you see in Solana? Maybe is it maybe another way to phrase this? Like, do you think that Solana has a pretty big competitive advantage against, the rollup roadmap? And I mean, obviously, like this is Anatoly's kind of premise is like, I'm not afraid of I'm afraid of the chain that has not 1,000 rollups, the chain of one rollup. So what are your thoughts on Solana?
So part of it is always just like it's a time horizon question to me. Because I think you could still make the strongest argument if you were to say what ecosystem has closest to the right end game from the start, I'd probably say it's Cosmos. But in practice, that wasn't like the right path to take from the start, like obviously. And a lot of Solana is a timing question to me. I think it's like a practical part of it. Of a lot of why I got interested in it last summer was it was very clear at that point that like Solana had not died for whatever reason. All of the really good builders, like they stuck around and they were all still there at like the depths of the bear market. And if you took the view, which I generally had, that like, I think that the market is going to come back like pretty soon. Like I think that prices are going to go up, users will go up, all of that. And you just do the back of the envelope math or like try to use these L2s. Like they're going to get expensive and it's really difficult to use them. What is the best thing today for the amount of demand that we have in crypto is one really big fast cheap chain, like does most of the stuff and gives you most of the throughput that we needed for what we have today. And Solana does that. And they were just like really just positioned as like the best fast horse at that time. And I still think that like they have a very bright future because of that. Like they're going to be like super important, have a lot of activity, all those things. Do I ever think that there's going to be similar to the reason that like I don't think everyone's going to ever opt into like the Ethereum shared sequencer? Do I think that like we're always going to have just one chain like Solana? Like no, I don't think we're going to have that. Like we're going to have a bunch of different chains. I think people are going to build L2s on top of Solana. Like it's going to happen. It's still pretty inevitable. Like people are going to want sovereignty over their own thing. They're going to want some degree of customizability. They're going to want some degree of the really cynical argument of like they just want a chain and they want to launch their own token and it makes it easier for them to do it. Like there's a lot of these reasons that are like anywhere from rational to irrational. People are going to want their own chains. And so I think that we will like have this longer march over time of like, there's going to be more chains and like, what's the right way to architect these things? And I think all of it will get better. But in practice today, like if you wanted to like go use a few different DeFi applications, what are you going to prefer? I go use Solana where they're all there and they all kind of work. Or like I go use like the one on Base and then like the other thing I want to go use is on Arbitrum and like I got to like figure out how to get between them. Like you're going to do the first one. Like it's just easier and it's better. And there's going to be long-term use cases for both. But yeah, I mean, like we're going to end up with many chains for like a lot of different reasons in my mind. And they're well positioned for that. Yeah.
One last quick question because you mentioned it. What DeFi applications like get you excited? these days? Like when you look at DeFi, it's like, oh, like this is very interesting because you come from a TradFi background, right? Like where do you look at DeFi and say like, oh yeah, clear unlock here?
I'll give a roundabout answer to that. It's not a thing that's live today. The thing that I've mostly gotten like super interested in very recently is like the Bitcoin kind of L2 landscape, which like for starters, I think everything that exists today, or I'll say almost everything, just so I don't piss off someone that like maybe I haven't looked at what they're doing. Pretty much everything today just like it doesn't make sense. It's just like a dumb multi-chain, multi-sig sidechain kind of thing. Like they don't actually make sense. The thing that does make sense to me is the kind of long run where someone is actually able to build a like very strongly trust minimized type of construction. Back to the conversation like what we're having at the start is like someone like Alpha. Like I think they are a great team and what they're trying to build like actually makes sense in this regard of the longer term. I think that excites me a lot because like the whole Ethereum kind of L2 vision is it's just for scale. It's like L1 is cheap, L1 is expensive. We need all these L2s to go make everything cheap. Bitcoin is still totally different in that it is still like the biggest and most desirable asset. And you literally just have no programmability, there's no DeFi, there's no anything. So the thing that I get excited by is in the longer term, which doesn't exist today, is like when there's actually like a real trust minimized Bitcoin, like quote unquote L2, I think that will be huge because I don't even think of it as like an L2. I think of like the trust minimized, like probably like one that wins that or maybe two. It's like, it's really Bitcoin's execution layer, like more than it is just like an L2. It's like really like adding the basic functionality and programmability of like, I like the main use case that I really want for that is super simple, dumb DeFi. I want to just like people who have like, I have a ton of Bitcoin, not me, I wish, of like, hey, I've had Bitcoin for like 10 years and like, I don't trust like Celsius or BlockFi or whoever with this. Like, I just want to have like MakerDAO in a trust minimized way that like I just go borrow against the Bitcoin. Really simple, dumb DeFi. That is like the starting point that like I'm super excited for. Because yeah, like most of the DeFi stuff that I say in practice, like today in this market, I don't see a lot of like super, super novel stuff. It's like mostly like this is a better perks exchange and you're adding like, we have this cool privacy thing that we're adding, which are like interesting. But there's no 0 to 1s to me that I see really today. They're mostly like restaking gimmicks built on top of that, or like this is a better perks exchange. Like we have this privacy thing and like some of those are gonna be really cool. But they're not 0 to 1s. The only like real huge 0 to 1 is when Bitcoin DeFi to me becomes like a real thing. And it's not like sidechain DeFi with like, we have like some, WBTC thing. That'll be exciting to me, but it's longer out.
Yes, I am also quite optimistic about pushing the execution layer to the L2s on Bitcoin, which for what it's worth is long been the rationale of Bitcoiners. And I think that Bitcoiners get a bit of a bad rap in that Ethereans are often quite convinced that they came up with modularism. Bitcoin has been modular in theory since the start, right? And like they have pushed all of this expressivity off. So yeah, that gets me excited as well. I hope that we can figure out some way to do what you're saying, like dumb DeFi that is at least very trust minimized. Well, we're coming up on time here, so I really appreciate it. I thought we covered a lot of topics. Do you have anything else that you wanted to add?
No, that was it for me. It was a ton of fun.
Awesome. Okay, where can people find you on Twitter? It's like, and then your website.
Yeah.
If you want to show your VC.
Yeah. Website is super easy. dba.xyz. That's our website. Yeah, can look me up on Twitter. And the main thing I'll show on Twitter is just like, again, that like we dropped the research day videos, I think like a day or two ago, something like that, which I guess will be a little longer when this comes out. But like highly recommend checking those out. Like really appreciate, like all the speakers did like an awesome job. So super appreciative to them.
Awesome. Thank you so much.
Yeah. Take care.